Bismillahirrahmanirrahim. Assalamu alaikum. I am Sayyid Akif Shah, lecturer finance at Institute of Business Studies, Kohart University of Science and Technology. The title of this course is Intermediate Accounting, and the course code for this subject is BS 363. This is lecture number 24, and the topic for today's discussion is a numerical illustration discussing how to record journal entries in the lessee's book of accounts, or we can say to discuss the journal entries in the books of lessee's account. The outline of this lecture consists of the discussion of a numerical illustration, how to make an analytical table for solving that numerical illustration, recording entries in the lessee's account, and finally making ledger account or the books of accounts pertaining to the lessee's entries. Let us discuss a numerical case. A company leased a colliery on 1st January 1991. It is actually a coal mine. A company has leased a coal mine from a landlord on 1st January 1991 at a minimum rent of 9,000 rupees, merging into a royalty of 50 paisas per ton with the power to recoup short working over the first 3 years of the lease. Dear students, you have to understand the relevant data. In a single statement, we have given the minimum rent of rupees 9,000, which shall be paid to the landlord at any cost. However, the royalty fee for extracting coal from this mine is 50 paisa per ton. Let's suppose if the company has utilized the mine at its full capacity and the royalty fee, which is multiplied with the tonnage output of the company by 50 paisa, is greater than the minimum rent of 9,000, then the rule shall be to pay the royalty fee to the landlord. The minimum rent will not be considered in that case. However, if the company is unable to utilize the mine in its good capacity and the minimum rent is greater than the royalty calculated, then in that case the company is supposed to pay out the minimum rent of 9,000 with the power to recoup this short working. Short working means the excess amount over the royalty payment which has been paid to the landlord is known as short working, and this short working can be recouped in the first 3 years of the lease. The output of the colliery for the first 3 years was 12,000 ton in the first year. The lessee has extracted coal 19,000 ton for the second year and 21,000 tons in the third year. And the question asks us to draft the necessary journal entries and also the short working accounts, royalty accounts, and the landlord accounts in the books of the company, who is lessee in this case. So the solution involves solving a practical question. So it is always advisable to know about the lessor and lessee. The lessee is company who has taken this colliery or the coal mine as a lease from landlord. So we knew that the company is lessee and the landlord is lessor. It is always advisable to analyze the situation given in the numerical illustration in the following analytical table. This analytical table helps the student or the solver to journalize the entries in the books of lessee's account easily. First column denote the year, which has been mentioned at 1991, 1992 and the 1993, since the 3 years data has been given. Second column is related with the output tonnage. In the first year 1991, company has extracted 12,000 ton. In 1992, company has extracted 19,000 tons, and in 1993 the company has extracted 21,000 tons of coal. The royalty fee for the first year is to multiply this tonnage with the royalty fee, which is 0.5 or 50 pesos per ton. Therefore, we can multiply it with the tonnage output and we get the royalty fee for the first year was 6,000. The royalty fee for the next year 1992, 19,000 ton multiplied by 0.5 or 50 pesos. 9,500 rupees is the royalty fee in the next year, and similarly we can multiply 50 pesos with 21,000 tons and we get 10,500 royalty fee for the third year. The minimum rent to be paid to the landlord is fixed 9,000 each year. It means that if the royalty fee is less than 9,000 as in the first year of operation, then this 9,000 minimum rent should be paid to the landlord. In this case, the short working, which is the extra amount paid over the royalty is 3,000 rupees. 6,000 plus 3,000 and you have to pay 9,000 rupees to the landlord. There is no surplus in the first year, so therefore we have put a hyphen, a dash. Short working recouped. Since the company has leased this colliery at January 1st, 1991, so there is no surplus or no short working which could be recouped from the previous years. Short working not recoupable. It means that time has been passed and the company was unable to recoup the short working. So it was first year, so no data is for this column. And the amount paid to the landlord in first year is 9,000. In 1992, once again, the royalty was 9,500. The minimum rent was 9,000. Short working was nothing because the royalty is well above the minimum rent, so no need to add up the short working amount. However, we got surplus in royalty, which is 500. Therefore, the company by rule can recoup the previously paid extra amount of short working in this year, and the rule allow us for the 3 years of the lease we can recoup the short working. Therefore, the company has recouped 500 rupees in the year end 1992. Short working not recoupable was nil, and the amount paid in this at the end of second year to the landlord was once again 9,000 minimum rent. In 1993, tonnage was 21,000. Royalty became 10,500 rupees. The minimum rent decided was 9,000. So short working is not there since the royalty fee is well above the minimum rent. So therefore, the surplus in this year is 1,500 rupees. So once again, the company has chance to recoup the previously paid short working since we have recouped 500 rupees already. So the remaining short working is 2,500, out of which we can recoup once again 1,500 rupees. Therefore, the final column shows the short working not recoupable leftover is 1,000 rupees because 3 years has been passed since the company has leased this colliery for production purposes. The company has obtained this mine at January 1st, 1991, and this date shows December 31st, 1993 since 3 years has been passed and lapsed. So therefore, the leftover short working will not be recoverable to the lessee. Once again, in the third year, the company has paid 9,000 rupees as minimum rent to the landlord. So this is the way how you can design an analytical table which assists you to journalize the entries in journal. Let's discuss the journal entry in the books of the company who is lessees for the books of accounts. So the journal entries are: first entry in the lessee's book is related with the royalty accounts, and the royalty accounts is an expense account for the lessee. Therefore, let me select the pen. Since the lessee royalty account is an expense account, and when there is increase in expenses of the lessee, it should be recorded by debit. So we have debited 6,000 as we have to pay the minimum rent of 9,000. So there was a short working account, and short working account is a temporary asset account in the books of lessee. Therefore, it needs to be debited because this is recoupable or recoverable from the landlord in the subsequent 3 years. And finally, we can debit the landlord account, which is the liability account in the books of lessee, by 9,000. So when there is increase in the liability, it is recorded as credit. Then you have to give a short narration being the royalty and short working due. And since this entry was on 1991st year at December 31st, we have another entry to transform or transfer the royalties at the end to the profit and loss account, but we will discuss second entry later on. Let's discuss the third entry first. At the first in the first entry, we have mentioned the royalties due to the landlord, and in the third entry we are actually in a position, or we are recording the payment of the royalty to the landlord. So the landlord liability, which was 9,000 rupees, there is a decrease in the liability account. So when there is decrease in liability, it is recorded as debit, and the cash has been paid to the landlord, which is 9,000, because we know that when there is decrease in asset, it is recorded by credit. So in this entry, we have paid being the payment of minimum rent. Now let's discuss the middle one, to transfer this royalty into the profit and loss account. As earlier discussed, that this royalty was an expense which may reduce the profit and loss of the company in later on when we will make the final account of profit and loss account. Therefore, the profit and loss account will be debited, since this is an expense, and a nominal expense of royalty account will be closed to the profit and loss account. So in order to write off or to close the royalty account, we have to give a credit entry to this expense of 6,000, and similarly the profit and loss account will be debited by 6,000, because the company who is the lessee in this case has paid this 9,000 rupees of royalty, out of which the specific royalty was 6,000 on the basis of output tonnage. However, the remaining 3,000 was a temporary asset mentioned on the balance sheet, which is recoupable unless and until the time has lapsed and expired, and the company cannot recover this amount. So these three entries will continue on for the next 2 years, because the question asks us to make the relevant entries for 3 years. So once again, in 1992, the royalty fee was, let's go back to analytical table, and here we know that the royalty fee for the next year was 9,500. So therefore we have debited the expense of the company royalty account by 9,500, and the liability account will be generated, that is landlord account, in the books of lessee by 9,500. The next entry shows the charge of royalty account into the profit and loss account. In this case, the royalty account, which was debited in the first case, will be written off against the profit and loss account. So therefore we have to give a cross credit entry, and then to write off it against the profit and loss account. Since profit and loss account generally it has a credit balance, so in order to have a decrease in the profit and loss account, we have to debit the profit and loss account. So same has been done, and the royalty account has been closed into the profit and loss account of the company, which is lessee. And the third entry will be once again the payment to the landlord. The payment to the landlord in this case will be, you can see that the second entry tells us that there is decrease in cash by 9,000, which is the minimum rent to be paid, because although the liability towards the landlord was 9,500, as we have extracted much more amount of uh, output from this culinary. However, we have recouped, which was a temporary account receivable on the company's account. It was recouped by 500 rupees. So the net payment to the landlord was 900 rupees. Here comes the third entry related with the royalty account. Once again, we have to debit the royalty account by 10,500. Let's go back to the analytical table. Here it is. In the third year, company's due over the royalty is 10,500 and the minimum rent is 9,000. However, the short working previously paid was quite well above. So therefore, this surplus will not be paid. Rather, this 1,500 will be recouped by the business or the lessee. So here it is, the third entry. The royalty account debited by 10,500 and the liability due, which is landlord account, to the will be credited because this is a liability in the lessee's book. Then we have a closing or transferring the royalties into the profit and loss account. Here it was in debit form, so we have to give a cross credit entry to write off this royalty expense account into the profit and loss account. So we done the same over here. The royalties being transferred to the profit and loss account. And then we got the third last entry in which we have paid to the landlord minimum rent of 9,000 as we have done over here, because we have recouped this 1,500 of short working what we have paid extra in the first year of operation. So short working, which was the temporary asset accounts, will be closed. Therefore, decrease in asset recorded by credit. And then the landlord liability account will be recorded, which is a debit entry, and the liability of the company will be written off. So this is the third year's entry. Let's come to the final entry, because we have recouped only 1,500 in the third year and this 500 in the second year. However, we had paid 3,000 of short working. So if we subtract the short working recouped from the short working account, we are left with 1,000 of rupees still in short working account, which will be written off because the time has been passed. And for companies, the lease agreement was to recoup this amount within 3 years of its initial operation. So therefore, the leftover amount in the short working account, which is written in the company's balance sheet over a temporary asset account of short working, will be written off. So when there is decrease in the short working, recorded as credit, and it will be charged against profit and loss account. It means that it will further reduce your profit and loss account. So this is the entry to written off the short working if the company was unable to recoup this short working within due time. We can give a short narration by writing being the amount of short working that cannot be recouped. Now let's discuss how to make the accounts, as the question second part asks us to make the account for short working, for royalty and landlord. So we have to make a short working account. Let's make a 3 column at both sides. This first column shows the date, second one shows the title, and third one shows the amounts pertaining to those debit and credit. And similarly at the right hand side, once again we got the date column, and then the title or balancing column, and then the amounts column. In order to make this short working account, we have to go back to the journal entries and find out where the short working was getting debit and when the short working account was getting credit entry. So let's go back. Let me remove all these inks. So here it is, the journal. You have to find out that in the first entry, short working was debited by 3,000 due to the landlord account, because this amount was paid or payable to the landlord. Let's find out the another short working. Here it is in the second year. Short working has been credited by 500. Let's find out the third entry. for short working has been credited over here. So you can pick up this amount. And why this short working was getting a credit entry? It was because of the landlord account. Similarly, it was because of the landlord account, and once again it was because of the landlord account. So you can go back to the short working accounts, write down the date 1991, January 1st. The landlord account was having a debit of 3000, so we have written the same. At the end of 1991st year, the balance in the short working account was 3000, which should be carried down to the next year. So we have done the same. In the next year it was carried down. So January 1st, 1992, the balance in the short working account which was brought down was 3000 as we have written. However, we have recouped at the end of this year 1992 at December 31st. The company has recouped 500 of its short working. Therefore, it was credited in the entry. So the leftover balance in the short working account, which was 3000, needs to be subtracted. The leftover amount in the short working account is 2500, which should be carried down to the next year, and we have done the same. At January 1st, 1993, the balance in the short working account will be 2500. However, at the end of this year, the company has surplus in the royalty which was recouped by the company. So the landlord account was credited because we have recouped 1500 of short working at the end of 1993. However, the leftover balance, which is 3000, out of 3500 and 1500 were recouped. However, the leftover amount was 1000, which was charged against the profit and loss account. As you can see, at the end of December 31st, 1993, there was once again a credit entry to the short working account. Therefore, this has been written off against the profit and loss account, and hence the short working account has been vanished or balanced out. Now let's discuss the royalty account, how to make this royalty account. For this purpose, you have to go back to the journal entries and find out where the royalty account was getting debit and when the royalty account was getting credit entry. So we can see that the royalty account was getting a debit entry in its first year. It was debited by 6000. It was once again credited in the second entry by 6000. Similarly, in the next year, it was debited by 9500, and then subsequently it was credited in the second entry in the second year, and once again the royalty was debited in the third year by 10,500, and subsequently in the next entry it was credited by 10,500 because of profit and loss account. So we have to pick up these values. And since this royalty was debited because of the landlord account, therefore we will mention this title in the royalty account. Here it is. At December 31st, it was because of landlord when the royalty was debited. At the end of the same year, it was credited because of profit and loss account. It was charged against them, profit and loss account. Once again, at the end of the next year, it was debited because of the landlord account by 9500. And then at the end of the same year, it was charged against profit and loss account. Therefore, it was credited. At the end of third year, once again, we have to pay royalty of 10,500 to the landlord. And at the end of the same year, it was charged against profit and loss account. So this is the way you can make the royalty account. Here it is the landlord account. How to make this? Once again, you have to go back to the journal entries. Here it is, and find out when the landlord account was debited and when it was credited. So in the first year end, landlord account was credited because of the royalty and short working account, and then the landlord account was subsequently debited because of the cash account. So let's see how did we record this first entry. Here it is the landlord account at December 31st, 1991. Because of the cash payment of 9,000, landlord account was debited, so we have done the same. And landlord account at December 31st, 1991 was credited because of the royalty and short working account as done in this first entry. Similarly, at the end of second year entry, the landlord account was debited because of the cash and short working account, and it was credited because of the royalty accounts by 9,500. Once again, both sides are equal. And let's check it out or counter check the last entry related with landlord account in the journal. We can see that in December 31st, 1993, the landlord account is point of emphasis over here. So the landlord account was credited because of royalty. Subsequently, the landlord account was debited because of what? Because of these two titles, cash account and the short working account. And here it was credited because of the royalty account. So therefore we will mention these two titles in its ledger account related with landlord. And here it is the landlord third entries. It was debited because of the cash payment and short working by 9,000 and 1,500, and in total the landlord account was debited by 10,500. Similarly, the landlord account was credited by 10,500 because of the royalty in December 31st, 1993. So this is the way how we can pick the data pertaining to any ledger or specific account from the journal entries and put it here in a accumulated form along with the reference title, which assists us to find out what was the reason for getting a debit or credit entry to the landlord account. So this was all about how to record the journal entries in the books of lessee's account. Thank you very much for listening to this lecture. If you have any question, feel free to ask on KCMS, or another way around, you can email me on my official email address and I'll be glad to answer your questions. Good luck for the day. Allah Hafiz.